Guys, in my previous S&P 500 technical analysis, I have mentioned this thing clearly that any upward movement, any bullish movement, whether it is logical or illogical, it will be seen as blessings in disguise. Blessing means opportunity. Now the question is that what kind of opportunity or what kind of golden opportunity? From the recent comments of the Federal Reserve Chairman and the FOMC minutes of the meetings, it is very much clear that the economy is heading to the recession. When the economy will be heading to the recession, then the stock market will also change its direction from bulls to bears. It might take a little time, but this will happen. Now, because the direction of the US stock market and the global stock markets will be this, the bearish direction, and as of now, what you are seeing, a bullish direction, a bullish reversal, or a bullish retrace. This means that if you are planning for the long term, at least 1 year, then this is the golden opportunity, like once in a lifetime opportunity for everyone. You can see that the S&P 500 is moving up and the US stock market is moving up. This means that you can start collecting shorts or the puts, the put options, and make sure that you are preparing for 1 year. So that when it will be the time when the market manipulators, when these the big ones, when they will sell and they will sell heavily, then you will also sell heavily, and then you will make tons of money, a lot of money. Initially it might take a little time, it might test your patience, but eventually it will pay off. It will give you much more than what you have anticipated. Now guys, I am going to discuss the agenda of this S&P 500 technical analysis. And the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Now because the S&P 500 has closed above 4155 on the weekly chart, this means that some things are going to change and the movement, the momentum. Okay, so this is all we are going to discuss, but definitely there will be a potential change on the weekly chart, right? So weekly chart means the hawk-eye view and the big picture for at least a month, for a quarter, okay, or more than a quarter. Now comes the second point of the agenda of this S&P 500 technical analysis, and the second point of the agenda is the S&P 500 support and resistance levels. So last week I have given you the support and resistance levels for the S&P 500, and I mentioned this thing very clearly that at first 4155 S&P 500 must breach, close and sustain above 4155, and then only it will move towards 4185 and 4195. And if the S&P 500 is able to sustain, breach and close above 4195, then only it will move towards 4227. And in the bear side, we have the support levels, right? And at that time, the S&P 500 was in probable consolidation. So the range, okay, it was very well defined from 4099 to 4155, or at most from 4088 to 4155, right? Similarly, I will give you the support and resistance levels for the S&P 500 for the coming week. Then the third point of the agenda of this S&P 500 technical analysis is the FOMC, because on Wednesday the FOMC minutes of the meetings will be published, and the confusion that the Federal Reserve Chairman has brought into the US stock market yesterday. Now that confusion will only be clear by Wednesday when the FOMC minutes of the meetings will be released. Then only we will come to know what the Federal Open Market Committee members were thinking, whether there are any chances that the Feds are going to raise the interest rates, or whether there are any chances that the Feds are going to pause the interest rates, and so on. However, the actual problem was that the Federal Reserve Chairman, rather than bringing the clarity to the stock market, the Federal Reserve Chairman has simply confused the stock market, the US stock market, the market movers, the market manipulators. Everyone is now confused that what actually he was trying to say. And then the most important part of this, the S&P 500 technical analysis. Well, I will not say that it is just important, but it is very much critical. Okay. So it is the US debt default, because in the history of the US has never defaulted on its debt. Now the fourth point of the agenda of this S&P 500 technical analysis is the S&P 500 technical analysis on the daily chart. This was the weekly chart. On the weekly chart, okay, weekly chart means the big picture, like for a quarter or so. Okay, means it is the trend setter. It simply set the trend and accordingly the entire stock market behaves, okay, and moves. Now the daily analysis means that what is happening in the short term, okay, means like for a day, for 2 days, for a week, for 2 weeks or so, okay, or maximum up to a month, but like 1 to 2 weeks, okay, that is the daily chart. Now the last and the final point of the agenda of this S&P 500 is the S&P 500 probable movement from May 22nd, that is Monday, through May 26th, that will be Friday. So just like last week I mentioned this thing, it will simply oscillate between these the levels up down until and unless there comes a breakout, either bull side or the bear side. Once there comes a breakout, then only it will move towards that particular side or in that particular direction. Similarly, now I will tell you that what is expected to happen in the S&P 500 in the coming week, and you might be thinking that it is going bullish, but in actual, no, there is a problem, there is a big problem. So guys, if you have not yet subscribed to my channel, then please subscribe to my channel and hit the bell icon. And if you are looking for the daily analysis and the daily updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the first point of the agenda, and the first point of the agenda of this S&P 500 technical analysis is the S&P 500 technical analysis on the weekly chart. So this is the weekly chart. Let me write it down. Weekly chart, W as in weekly chart. So the weekly chart means that the one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week, right? Now this week, once again, we have seen that the S&P 500 was able to close above 4155 after these the two rejections. And why and how it was able to close this above 4155? Thanks to the manipulators, because they have manipulated the S&P 500 on Wednesday and Thursday, and that heavy push, it simply brought the S&P 500 into the bull side. Okay, otherwise this was not possible, because earlier it was simply kind of consolidating, right? Anyways, now let's first discuss this the candle itself. Now if you look into the candle, there is no defined shape of the candle. However, the color of the candle is green, simple, and it is good green candle, good bullish candle. This means that there are bullish sentiments in the S&P 500 on the weekly chart, as simple as that. Now let's see what the technical indicators are saying. Now first comes the Bollinger Bands. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed in between the upper band of the Bollinger Band and the median of the Bollinger Band, this means that the S&P 500 is clearly bullish through the Bollinger Bands, right? Now comes the moving averages. Moving averages means EMA, exponential moving average. If you look into the moving averages, the S&P 500 has closed above all of the moving averages. Secondly, there is a clear fan out in all of these the moving averages. This means that the S&P 500 is clearly bullish through all of these the moving averages. Then comes the Ichimoku cloud. For last 2 weeks, it was within the Ichimoku cloud. It was in the confusing situation, in the conflicting situation. But now that the S&P 500 has closed above the Ichimoku cloud, this means that the S&P 500 is bullish through the Ichimoku cloud, right? Now let's see what other technical indicators are saying on the weekly chart. First comes the MACD. Now if you see that the MACD is more than the signal, this clearly means that the S&P 500 is bullish through the MACD on the weekly chart, right? Now comes the stochastic RSI. K channel is less than the D channel. This means that the S&P 500 is bearish through the stochastic RSI. Why it is not considered bullish through the stochastic RSI? Because both of these, the K and the D channels, are below 90, right? And clearly the volatility is increasing and all of the technical indicators are good and normal. What it means? This means that the S&P 500 is bullish through the Bollinger Bands. S&P 500 is bullish through the moving averages. S&P 500 is bullish through the Ichimoku cloud. S&P 500 is bullish through the MACD. S&P 500 is bearish through the stochastic RSI. What it means? This simply means that the S&P 500 is 70% bullish on the weekly chart and 30% bearish on the weekly chart. Why it is 70% bullish and not 80 or 90% bullish? The reason is that the MACD and the stochastic RSI, these are just inverse. MACD and the stochastic RSI, they are not aligned in the same direction. And if you have subscribed to my channel for last many months or years, then you have seen this thing happening, that whenever the S&P 500 and the stochastic RSI, they are aligned in a particular direction, in the same direction, then only that direction becomes the direction of that particular stock or the index, just like S&P 500 or the Dow Jones or Nasdaq, okay, or anything else. Now that it is 70% bullish, then what is the problem? What is the actual problem? The problem is that there are not just one, but there are these multiple problems. The very first problem is that this was the high of this year, and the high of this year was 4195, and this time the S&P 500, it failed to close above 4195, and it closed at 4192, right? Only a $3 difference, only a $3 difference. But and you might be thinking that okay, that the $3 are nothing because it is a $27 trillion market. Okay, then let me tell you that it is not about the $3. Even if there comes okay this a difference of 1 cent, then also everything can change, because this is the stock market, right? And just to make it clear, if you see that the S&P 500 has closed just below the boundary of the Ichimoku cloud, the boundary of the Ichimoku cloud was at 4080. It was at 4080 and the S&P 500 closed at 4079, right? What was the difference between these two? Only $1. And then what happened this the next week? A very heavy fall. So the stock market, it counts even 1 cent. Okay, so this is the $3, it is a very big thing. This means that the closing above the Ichimoku cloud of the S&P 500, it cannot be trusted until and unless there comes another bullish candle, and that bullish candle must close above 4195 by next Friday. Then only we will trust this thing, else it is just fake, it is a trap, and the S&P 500 and the entire stock market is will go bearish. Now this was one thing. Now the other thing is that because the S&P 500 has closed above 4155, this means that yes, now it is going to bring some bullishness. However, once again, the same theory, the same logic is applicable, that now we need 2 consecutive closings above 4155, because last time we have seen that one closing above 4155, next week it closed below 4155, and then again a bearish movement. That is why we need one more confirmation before it can be said that yes, now it is safe to trade in the S&P 500 in the bull side. Okay, and if you see that this was the same thing I mentioned in my final update yesterday to my community members, that the S&P 500 is most likely to close above 4155, and it did if the situation remains as is, and that is a significant change, right? Other than that, closing of the S&P 500 below 4195 means the S&P 500 on the weekly chart has failed to close and sustain above previous high of this year, and this will be seen as bearish. Means now the S&P 500 has to once again struggle to move up and sustain above 4195, and then only it can move towards 4227, and that's it, right? This means that the 2 consecutive closings, the weekly closings, this the theory is there as is. Secondly, even on the daily chart, okay, through the daily candles, now it is expected to struggle, and at first it must close above and must sustain above 4195 before we can say that okay, yes, it has any potential to move towards 4227, right? So I will discuss this thing in the last point of the agenda of this S&P 500 technical analysis in very detail. So guys, once again, if you have not yet subscribed to my channel, then please subscribe to my channel and hit the bell icon. And if you want the daily updates, the daily analysis of the S&P 500 from Monday through Friday, and if you want to know before the things happen, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let's move on to the second point of the agenda of this S&P 500 technical analysis, and the second point of the agenda is the S&P 500 support and resistance levels for the coming week. Now guys, I am going to discuss the second point of the agenda of this S&P 500 technical analysis, and the second point of the agenda is the S&P 500 support and resistance levels for the coming week. So this is the daily chart and these are the support and resistance levels, and I want to begin with the 4207. Okay, now 4207 is an intermediate resistance between 4185 and 4227. Yesterday we have seen that the S&P 500 has failed to clear 4207. This means that now any kind of bullish movement has to struggle at 4207 before it can move towards 4227. So 4207 is important, but it is not very heavy. Okay, means the S&P 500 can breach 4207 if there comes a little good push, okay, a bullish push. And after 4207, then we have our standard resistance levels 4227. 4227 was this is something that we have discussed, okay, a lot of times in last many months. And if you remember that in many of the previous S&P 500 technical analysis, that as of now in the current scenario, the S&P 500 can move up to a maximum of 4,300. What is 4,300? This is the 61.8% of the Fibonacci retracement level, right? And what was this 4155? This was the 50% of the Fibonacci retracement level. This means that before the recession begins, okay, through any logical or illogical movement, the S&P 500 can move up to a maximum of 4,300. However, in actual it is 4227. Okay, it is 4227 because technically 4227 at max is supported. Okay, but 4,300 can only be achieved through the manipulation. Otherwise, 4,300 cannot be achieved, right? But yes, technically 4227 can be achieved. That is why I mentioned this thing, that it is whatever upward movement comes, it will be seen as blessings in disguise, because you are getting a golden opportunity to collect the shorts and the put options, so that when comes the time, then just like these are market manipulators, you can sell and you can make very heavy money, right? A lot of money. Anyways, so this means that as of now technically 4227 is supported, and S&P 500, when it try to move up, then it is expected to struggle around 4227, and before it can move towards 4227, it has to struggle around 4195. Okay, anyways, that's a different picture. Now until and unless the S&P 500 breaches, closes and sustains above 4227, it has no chances to move towards 4,300. Before 4,300 we have 4291. 4291 is the golden resistance. Okay, before that we have 4265. Anyways, so at first the S&P 500 must move up, must breach, must close, must sustain above 4227, then only it will be having any chances to move up. Now one more thing, S&P 500 must breach, sustain and close above 4227 by Wednesday mid of the day. Okay, like 2 p.m. Eastern time. Okay, Wednesday. This must happen by Wednesday 2 p.m. Eastern time, because at 2 p.m. or 2:30 p.m. Eastern time, US and Canada, on Wednesday, the FOMC minutes of the meetings will be published. And if the minutes of the meetings again repeats the word recession, again says that nothing has changed and the Feds can raise the interest rates, in that case there will be a fall, right? Anyways, we were discussing the support and resistance levels. So these are the resistance levels. Now comes the support levels. As of now, what we can say that the good support is the 4185, because earlier 4185 it was acting as very heavy resistance. Okay, but and this time 4185 is going to work as very good support. Okay, very good support. And when the S&P 500 loses this support 4185, then it will come towards this a very heavy support, that is 4155. 4155 was earlier restricting or has restricted the upward movement of the S&P 500, but now the same is going to support the fall of the S&P 500. And if the S&P 500 breaches 4155, then we have 4127, very heavy, very good support level. Then we have 4110, 4100, 4091 back to back. Then we have 4065 and 4035, the range, okay, not actually the range, but the 4035 is the zone. 4035 is the zone, right? And also we have 200-day EMA at 4035, okay, around 4035. This means that any heavy fall will be it will be very well supported, or it will be handled by the 4035 zone. So for the next week, this will be the support and resistance levels. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community in order to get the daily analysis, the daily updates of the S&P 500, then I have given the link in the description of the video and also in the comment section. Now guys, let's move on to the third point of the agenda of this S&P 500 technical analysis. And the third point of the agenda is the FOMC, Federal Reserve Chairman, and the most critical part, that is the US debt default, whether the US can default on its debt or not. And it's not just about what can happen, it's about how it can happen. So guys, just one more thing, that these are the services that I offer, and if you want to avail any of these services, then I've given the link in the description of the video and also in the comment section. And also remember that I have recently updated the screenshots of the trades that I've given to my members, and also I have mentioned the calculations here. Now guys, let's discuss the third point of the agenda of this S&P 500 technical analysis. And the third point of the agenda is the FOMC. Minutes of the meeting, Federal Open Market Committee minutes of the meetings, that is going to be published on Wednesday 24th. Then the Federal Reserve Chairman. So yesterday the Federal Reserve Chairman, he has expressed his views on the economy, okay, and the economic matters. Then comes the US debt default. Okay. So let's discuss the three things. The first thing is the FOMC, the Federal Open Market Committee minutes of the meeting. And this is scheduled at 2:30 p.m. Eastern Time, US and Canada, on May 24th, that is Wednesday. Now remember guys that last time in the previous Federal Open Market Committee's minutes of the meetings, we have seen that number one, that it was the first time that the committee members have expressed their views on the recession. Second thing was that the Federal Open Market Committee members, means there's the committee members, okay, they have anticipated that the inflation will be back to 2% by 2025. In 2 years, the inflation will be back to 2%, right? As of now, the inflation is how much? The headline inflation is 4.9%, okay, and the core inflation is 5.5%. Now, a decline from 4.9% or from 5.5% to 2%, that is the benchmark inflation rate. It will take 2 years as per the committee members. This means that as everyone might be expecting that now the inflation will come down, okay, back to back, it will be just coming down, okay, every other month. And if that happens, in that case, the 2% target rate, it can be achieved within 1 year, okay, within 6 to 8 months, right? But the Federal Open Market Committee members, these the policy makers, okay, this is the Federal Reserve, okay, they have their tools, they have these the analysts, okay, and now their views were very much clear that it will take 2 years from 5.5% to 2%, or from 4.9% to 2%. Now why and how it is going to take, means why it is going to take this much of time. So this is something that they know, okay, exactly why that is, means why it is going to take that much of time, okay, whereas everyone else, like these the news channels and everyone, okay, these are market manipulators, etc., they are saying that like within 6 months or so, okay, that inflation will be back to 2%. So either the market manipulators can be right, or the Federal Reserve, this the system itself, can be right, right? So let me know in the comments, what do you think, that whether the market manipulators and these news channels are right on this, the inflation, or the Federal Reserves, the system itself. Anyways, so let's not speculate and let's stick to what the system is saying, what the policymakers are saying. They are saying, okay, 2%. Similarly, this time also on May 24th, we will come to know that what the committee members are thinking, whether they are still thinking that the recession is there. Secondly, what are their views on the inflation, whether they are thinking that okay, the inflation has come down significantly and it will further come down significantly, or if they are concerned that the inflation can give a bullish reversal. Okay, so the concerns and these things, then if there is any change, okay, in this the 2%, 2025 and 2%, if there is any change, okay, in this thing. Secondly, if there is any change in the, okay, in this the target rate, okay, there is the federal funds target rate. Recently we have seen that the Feds have raised 500 bps, okay, within 1 year, right? Whether the Federal Open Market Committee members, they are anticipating more rate hike or more rate hikes or not, right? So we will come to know about that. Now on Wednesday itself, okay, if the minutes of the meeting says that or if the outcome of the minutes of the meetings, okay, if it is bearish, in that case the US stock market will go bearish, the S&P 500 and the Dow Jones will go bearish, right? If it comes neutral, in that case the market manipulators will define the movement. If the Federal Open Market Committee is, okay, the minutes of the meetings, okay, says something positive, in that case the US stock market will move up. Okay, as simple as that. So this was about the FOMC. Now let's see, okay, what the Federal Reserve Chairman has said yesterday. Okay, what were his comments? So this was the update that I have given to my community members. Now the summary of the conference was that everything went neutral and the Federal Reserve Chairman was not asked straightforward questions on the inflation and the rate hikes. Okay, see, generally we have seen that after this the rate hikes, okay, there comes this the press conference of the Federal Reserve Chairman and the press reporters. Okay, they ask, you know, very straightforward question, and again, okay, sometimes or most of the times, again and again, okay, the same questions, like whether there will be any rate hikes, whether there will be any pause in the rate hikes, and so on. Okay, but yesterday, okay, this was not the case. Actually he was asked about this indirectly. Now the Federal Reserve Chairman said that there is a lot of uncertainty in the economy, in the stock market, in the overall market, and that as of now no one knows for sure what is truly happening, and under these circumstances the Federal Reserve or the Feds cannot relax. The thing is clear that the uncertainty, okay, that was brought into the economy back in 2020 is still there in 2023. Now the Federal Reserve Chairman said that Feds have reached to the levels after 500 bps rate hike in a year, wherein the Feds can wait for the data and will assess the data or will analyze the data to decide further, but has clearly declined the fact that the Feds will pause the rate hikes. Now the Federal Reserve Chairman has clearly mentioned that as of now we cannot say or assume that the Feds are going to pause the rate hikes because of high level of uncertainty. Yes, uncertainty is the problem. Uncertainty is the problem for the economy, for the stock market, for the market manipulators, for me, for you, for everyone, even for the government. Uncertainty is the problem, that there is like the picture is not clear. However, the interest rates were raised too quick, too high, which is why Feds will be a little more careful and more data driven, and what exactly it means no one knows other than the Fed chairman himself, right? Now the impact of this, the conference will be neutral on the markets, means the stock market, the US stock market and the indices like S&P 500 or the Dow Jones or Nasdaq. Now the impact will be neutral on the US stock market in a sense that the US stock market will be more confused. The stock market will be more confused. The traders will be more confused. The market manipulators will be more confused that what exactly the Fed chairman and the Feds are thinking. That is the problem, because yesterday's conference, the Fed chairman, he has simply answered the questions indirectly, directly, indirectly, okay, means in a manner that it has created more and more confusion, and that was the problem. Now everyone is confused that what is going to happen, what the Feds are actually thinking. Now the US stock market, it can move up if it wants to, because there is a confusion, and confusion means that the market manipulators are going to decide the fate of the stock market, right? Now the US stock market can move up if it wants to. The stock market can go more careful at least until FOMC minutes of the meetings, because we do not know that what will be the outcome of that. Okay, this the minutes of the meeting. Now only the FOMC minutes of the meetings will clear the confusion that whether there is any change or whether they are stick to the plan, like recession and then 2 years for the 2% decline in the inflation, right? So that the minutes of the meeting is expected to brought in more clarity to the stock market and to everyone, right? Now if the stock market decides to move up any further, and if the FOMC and if in the FOMC it comes out that the Federal Reserve or the Feds are most likely to raise the rates, okay, the interest rates, then hundreds of billions of dollars will be on stake, and it's a high risk with little reward, right? Now comes the US debt default. So US debt default means that the date is June 1st. By June 1st, these both of these parties, okay, the Republicans and the Democrats, okay, they must agree to some point, okay, or they must agree to a point that the US must not default on its debts, right? As of now, the US is enjoying AAA rating. AAA rating means the most credible economy, most credible stock market, and the dollar, okay, it is, well, it means the dollar can be accepted, respected, and can be trusted, right? Now if by June 1st, if there comes no concrete solution, okay, from these the policy makers, and then it comes, okay, that the most likely the US is going to default, in that case definitely the rating will be okay, it will be like maybe, okay, if not AA positive, then AA negative, okay, most likely AA negative, yep, not BB positive, okay, but AA negative 2 at most, okay. That means that now the dollar cannot be trusted, now the US economy cannot be trusted, now the US stock market cannot be trusted, and the most trusted government and the most trusted stock market, most trusted system cannot be trusted that much, okay. See, defaulting on the debts does not mean that the everything will just like collapse, economy will collapse and everything will like, no. The defaulting on the debt means that, for example, okay, US has like 1 2 3 4 5 6 7 8 9 10, okay, these kind of debts, right? Now the US is able to repay some of the debts, okay, and but not all, right? Now which debt the US is going to repay, that will actually depend, okay, that will actually define its future credibility. See, one thing is very much clear, that when the US defaults, then the degree will not be seen, right? That whether the US has defaulted, okay, a little, okay, or heavily. In that case, the US economy and the global economy will simply enter into the recession from the June 1st itself. As simple as that, very, very clear, okay. Now comes the other scenario. The other scenario is just like what we have seen, I think it was 2011, 2010 or 2011. So the Republicans, okay, they asked the Democrats to accept, okay, their demands, and then only they will allow, or then only they will not let the US default on its debts, right? That time the Obama administration, okay, has accepted to the demands, okay, and then we have seen that the agencies, okay, that time has downgraded the credit rating, okay, to from AAA to AA, okay, for the US, right? That was the first time in the history, right? So recently we have seen, okay, this thing in the news that the Republicans, okay, especially, okay, we have heard this thing that Mr. Donald Trump, okay, he's saying that let the US default on its debt, okay, if the Democrats, okay, if they do not agree to the terms, okay, means that he is very much clear that he is okay if the US defaults, okay, if the Democrats, if they do not accept to the terms. And the Republicans, okay, they have also, means somewhat, okay, to that level have also, okay, cleared the intention that if the Democrats, if they do not accept to the terms, okay, means the terms of the Republicans, then definitely, okay, this picture can be seen that the US will default. Okay, so this will be the first time in the history, okay, that we'll be seeing that the US has defaulted on its debt. Okay, as of now, this has okay, this was never ever seen in the history. So this means that if there comes no conclusion, or if there comes means no settlement, okay, or nothing in between the Republicans and the Democrats by June 1st, in that case most likely the US is going to default on its debt. Okay, so there is this thing, the debt ceiling. Okay, the debt ceiling, this was the concept that was brought in by the Congress itself. Okay, so rather than creating a solution, or rather than giving any kind of solution, okay, the debt ceiling thing, this has simply created the problems again and again. Okay, anyways, let's not speculate, okay, what is happening and what is not happening. Let's wait for June 1st and let's see whether there are any chances, okay, although the chances are less than 0.1% that the US will default on its debts. Okay, but if that happens, then this will be historical, okay, first time in the history, and it will be having catastrophic, okay, catastrophic impact on the US economy, on the global economy, and on the US stock market and the global stock markets, and then a recession, okay, a little long recession like 3 to 4 years, that will be there. So guys, once again, if you have not subscribed to my channel, then please subscribe to my channel and hit the bell icon. And if you are looking for the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then I have given the link in the description of the video and also in the comment section. So guys, we are here and this is the fourth point of the agenda. And the fourth point of the agenda is the S&P 500 technical analysis on the daily chart. Now let's see what is happening on the daily chart. And if you remember that last week, okay, this was 50-50%. The situation was 50-50%, okay, means a neutral trend was seen on the daily chart of the S&P 500, and the S&P 500 was looking for a direction. Okay, let's see whether the S&P 500 has seen or has got any direction or not. Now, at first, the candle itself. If you look into the candle, then this is a bear candle and this is a small bear candle. Okay, not a heavy bear or not a heavy bear candle, but a small bear candle. But the problem is that this candle has closed below 4195. That is the only problem. Okay, closing below 4195, closing as a red candle, a bear candle. This means that there are some bearish sentiments at the time of closing of the S&P 500, okay, or the stock market. Now let's see what the technical indicators are saying on the daily chart of the S&P 500. At first, okay, this is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 is trading in between the upper band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands. Then comes the moving averages, a clear fan out in the moving averages, and also a closing is above the moving averages. This means that the S&P 500 is clearly bullish through the moving averages. Moving averages means the EMAs, right? Then comes the Ichimoku cloud. Because the S&P 500 is trading above the Ichimoku cloud and has closed above the Ichimoku cloud, this means that the S&P 500 is bullish through the Ichimoku cloud. Now comes the MACD. There is a change in the MACD. So MACD is now more than the signal. This means that the S&P 500 is bullish through the MACD. Then comes the stochastic RSI. Again, a change in the stochastic RSI. The K channel is more than the D channel. This means that the S&P 500 is bullish through the stochastic RSI. Volatility is increasing and all other technical indicators are normal. Now, what it means? So let's see what it means. The S&P 500 is bullish through the Bollinger Bands. S&P 500 is bullish through the EMAs, the exponential moving average or the moving averages. S&P 500 is bullish through the Ichimoku cloud. S&P 500 is bullish through the MACD. MACD means moving average convergence divergence. S&P 500 is bullish through the stochastic RSI. This means that the S&P 500 is 100% or absolute bullish on the daily chart. On the weekly chart, what we have seen, On the weekly chart, we have seen that the S&P 500 is 70% bullish, only 70% bullish. And now you might be thinking that because the S&P 500 is 100% bullish on the daily chart and 70% bullish on the weekly chart, this means that the S&P 500 is going to move up. Not exactly. And this is what I'm going to tell you in the next point of the agenda, that is the probable movement. That why even though it is 100% or 70% bullish, but still it is expected to, or still it can still struggle to move up. Okay, why this thing is not going to work? Why the 100% bullishness or the 70% bullishness can still or may still not work for the S&P 500? Now guys, there is one more important thing that I want to share with you, that if you want to join my Patreon community in order to get the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities, the US stock market opportunities in the premium stocks, let me tell you that how you can join my Patreon community. So I have given the link in the description of the video and also in the comment section. When you follow that link, then you will visit this my Patreon page. Now on this my Patreon page, you will see that there are the three membership levels. Okay, now these are the three membership levels. The first one is the daily S&P 500 updates. This is for non-US Canada residents, right? The second one is the daily S&P 500 updates only for US and Canada residents. And the third one is the US stock market opportunities as well as the daily updates, and this is open for all, right? So if you just want to get the daily S&P 500 analysis and the daily S&P 500 updates, then you can participate either of these two levels. So the first one is for non-US Canada resident and the second one is the US and Canada residents. And if you want to get the US stock market opportunities in the premium stocks, minimum 5 to 10 every week, as well as the daily updates of the S&P 500, daily analysis of the S&P 500, then you can opt for this, the market opportunities and daily updates. This is open for all irrespective of your location or anything else. And once you have joined my Patreon community, then you will be able to unlock these, the daily updates, the daily analysis of the S&P 500 as well as the US stock market opportunities. And guys, if you notice that many of the members have joined my Patreon community and they are getting the daily analysis, the daily updates of the S&P 500 as well as the US stock market opportunities from Monday through Friday, each and everything. So if you also want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the fifth point of the agenda of this S&P 500 technical analysis. And in this, the fifth point of the agenda, I will tell you the probable movement of the S&P 500 from Monday through Friday in the next week. So as usual, you must understand and you must remember a few things. Number one, Wednesday at 2:30 p.m. Eastern Time, US and Canada, the FOMC minutes of the meetings will be published. And that will give us some clarity that what the committee members are thinking. And because yesterday the Federal Reserve Chairman has brought in more confusion in the US stock market, so this means that as of now we can say that on Monday and Tuesday and by mid Wednesday we can see that okay, that the US stock market is okay, means technically there must not come any heavy fall or any heavy bullish movement, rather it should go sideways, okay, for next 2 or 2.5 days, right? And then on Wednesday, okay, 2:30 p.m. Eastern Time, once the FOMC minutes of the meetings, okay, that is published, then only the S&P 500 or the US stock market can get okay a defined direction or a definitive this the direction. Okay, that is the one thing. The second thing is that no one is talking about the bank. The bank, okay, what bank? It could be any bank, right? Because recently the Federal Reserve, okay, they have raised the interest rates by 25 bps. This rise in the interest rates, okay, this is creating or has put a lot of impact on the banks. Okay, as of now there is no solid news that which bank is under stress. Okay, but looking into, okay, what is happening in, most of these are big, okay, and these are regional banks. Okay, looks like that something is not right. Okay, and most likely there will be a news. Okay, when I'm not saying that the news will be on Monday or Tuesday. I'm simply saying that whenever there will be a news, it will be a sudden news. Okay, an instant news. Okay, that this bank has failed, just like Silicon Valley Bank or Signature Bank or First Republic Bank or Credit Suisse. Okay, that this bank has failed. Okay, secondly, we are not only talking about the US banks. We are also talking about the global banks, the big banks, for example Barclays, okay, HSBC, and then we have, other like Deutsche Bank. Okay, means there are many other, known, these the global banks. So I'm simply saying that only one big bank, okay, once it goes down, then that's it. Okay, no more bullish trend, and okay, we are done. So this, whenever there will be a news, okay, it will be instant, right? Now the third thing, okay, and most important and the most critical thing is the US debt default. US debt default. Okay, now because it will be like only 10 days, 10 or 11 days. Okay, and these are policy makers, they must reach to some conclusion, okay, within these the 10 days, because if that means if the negotiation failed, okay, and if there comes, anything that the US is going to default on its debt, then a free fall against all technicals, against all data, against all news and everything, a free fall in the US stock market, in the global stock market, and the US economy and the global economy will enter into a severe recession. Okay, not a normal recession but a severe recession, and there will be long lasting, okay, these the impacts, means even after the recession we'll be feeling, okay, those the impacts of, that recession, right? So these are the three most important things, okay, for the coming week, and you must remember, okay, these things. And once the FOMC minutes of the meetings is published, okay, on Wednesday, and if you are my Patreon community member, okay, then I will analyze, okay, that okay, these the minutes of the meetings, okay, and I will update you. And as you know that my analysis is most of the times, okay, my analysis is different from these the news channels or from whatever, okay, you might be seeing, okay, through any of these the platforms. Anyways, now let's discuss the probable movement. Okay, in the probable movement, looks like it is bullish, but in actual it is not. Okay, clear? Now, why it looks like that, okay, it is bullish, and why I'm saying that, okay, it is not bullish, okay, or it is going to struggle. So very first reason is that this candle itself, that this the last candle that was formed on Friday, it has closed below 4195. Okay, 4195, that was the benchmark. Okay, now it closed below 4195 at 4192. Okay, what was 4195? 4195 was the high of this year. Okay, the high that the S&P 500 has made. And because this was seen on the weekly chart, okay, that is why it is a problem that the S&P 500 on the weekly chart failed to clear the 4195 level, right? That is why any upward movement will be restricted. Okay, not actually restricted, but S&P 500 is expected to struggle. Okay, and it needs, okay, a little more money and a little more push, okay, psychological push, okay, as well as, means this thing, then only the S&P 500 can move up. But the actual problem, okay, it is there in the Dow Jones, or it is because of the Dow Jones. Why the problem is because of the Dow Jones? What is so special in the Dow Jones? First of all, you need to understand that the Dow Jones, okay, is seen as the face of the economy, right? This means that whatever happens in the Dow Jones, it impacts all of these the other indices like S&P 500 or the Nasdaq and the global stock markets. Okay, now if you notice that the Dow Jones, it has closed below the moving averages. That's it. Okay, you need not to look into any of the technical indicators, just look into the moving averages, that the Dow Jones has closed below the moving averages. Okay, And the other problem is that looks like if there comes any small candle or one more bear candle, okay, either on Monday or on Tuesday, in that case the moving averages will give a slip. Okay, and if you have subscribed to my channel for last many months or years, then you know that I mentioned the slip. Whenever a slip is formed, in this case this will be the bear slip, whatever, okay, means if it's a bear slip, in that case there will be bearishness, bearish movements, fall and fall. If it's a bullish slip, in that case bullish movement and up and up, right? That is the real problem. This is the problem that is coming through the Dow Jones, and that is why even though the S&P 500 looks bullish, okay, it is not. In actual, it is not, and it is expected to struggle because of the Dow Jones. Okay, and if you are new to the stock market, then you must learn that all of these indices, they are interconnected. Okay, means the indices, they are made up of the stocks, the premium stocks like Apple, Microsoft, United Healthcare, Home Depot, CRM. Okay, these are the stocks, but these the stocks, the weightage of the stocks, okay, it is variable and it varies, okay, in these the three indices. That is why if something happens in one index, particularly in the Dow Jones, then it is reflected in all other indices. If something happens in Nasdaq, okay, in that case this might not be reflected by that percentage points, okay, or by that much level, okay, in the S&P 500 and the Dow Jones, because the Nasdaq is mostly a tech index, okay, or a technology index. Means that the Nasdaq is mostly representing what is happening in the tech industry, in the technology domain, okay, whereas the S&P 500, it consists of or it contains, okay, the technology, okay, and other domains also, but again 20 or 23% is the tech. However, it is the Dow Jones. So Dow Jones has balanced, okay, all of these things, all of the sectors are the part of this Dow Jones. And the Dow Jones, okay, it contains, okay, the top premium, the blue chips, okay, of the US stock market or the US economy. Okay, all of the 30 stocks of the Dow Jones are the blue chip stocks, right? Now one more thing, that technically the Dow Jones is 50-50. Technically the Dow Jones is 50-50. Oh, sorry, not 50, I will not say 50, because through moving averages it is bearish, through MACD, okay, it is bearish, MACD itself is negative, other than that Bollinger Bands, okay, it is bearish. So like 70% bearish. Dow Jones is 70% bearish. Now what we have seen on the daily chart of the S&P 500, that S&P 500 is 100% bullish, okay, but the Dow Jones is 70% bearish. This means that this upward movement, okay, the upward movement is not real, okay, that we have seen through manipulation. Other than that, okay, if any more bullish movement has to come, then also the S&P 500 is expected to struggle because of the Dow Jones, because only and only because of this the Dow Jones, right? So now this picture is very much clear that why it is not bullish even though technically it is bullish, right? And if you have any confusion, then please feel free to comment and I will answer to your questions. Okay, now comes the next part. The next part is that 4,300, this is the 61.8% of the Fibonacci retracement level. 4155 is the 50% of the Fibonacci retracement level. This means that as of now the S&P 500 is trading between the 50% of the Fibonacci retracement level and the 61.8% of the Fibonacci retracement level. Okay, now this means, see, generally, okay, when this kind of situation is not there, like recession, okay, or the debt default or the rate hike, whenever, okay, this kind of situation is not there, in that case, yes, okay, it is highly likely, means we have seen that it will move towards the 61.8%, and okay, in some time, not immediately, but it might take some time, okay, it will hit the 61.8% Fibonacci retracement level. Okay, but those are the normal times. Okay, but particularly this time when the Federal Reserve, inflation, US debt default, means a lot of things, okay, and the biggest thing is the uncertainty, okay, that is the problem. So under these circumstances, we have seen that again and again, whenever it try, again and again, whenever it try, it fails. Okay. So what it means? This means that as of now, on Monday, if on Monday S&P 500 is able to hold and sustain above 4195, if it is able to hold and sustain above 4195, then only it will be having chances to move up. But again, in that case also, okay, it will be better to wait for two consecutive closings above 4195, okay, so that we can trust. Now if it closes, breaches and sustains above 4195 on Monday, then only on Tuesday we'll be having, or we can see that yes, it is moving further up towards 4227, or Monday itself, okay, it can in such a situation, it is not that far, okay. Then the 4227 will be the next heavy resistance that is going to restrict the movement. At or around 4227, the S&P 500 is again going to find some resistance, okay. And as I mentioned earlier, that the market manipulators or the US stock market only has 2.5 days, Monday, Tuesday and mid of Wednesday, okay, that they can do whatever they want to do. But after in the second half of Wednesday, then the FOMC minutes of the meetings will be published, and then no, they cannot do, okay, whatever they want, right? So as of now, a movement towards 4300, okay, in these 2.5 days, that is see, I will not say that that is not possible, okay. I will say that the chances are less than 1%, less than 1%, that within 2.5 days that the S&P 500 can move up and hit 4300. But once again guys, remember, if you are trading in the long term, if your plans are for the long term, at least 1 year, then any upward movement for any known or unknown reason doesn't matter, it is a blessing in disguise, because you are going to collect the shorts and the put options, okay, whenever it retraces, because eventually this will be the result, right? So this is the movement, okay, that we are expecting, okay, means if and only if, okay, in this particular case, if on Monday this happens, then on Tuesday, okay, it can further move up. If on Monday, if it fails, yes, that is the, okay, this is the case. If on Monday the S&P 500 fails to close above 4195, in that case there will be two consecutive rejections from the 4195, and that is expected to bring more bearishness. Okay, does not mean, okay, this the heavy fall, no. Bearishness simply means that we can expect, okay, a downward movement, but that downward movement will be limited up to like 4155, okay, because as of now 4155 is going to hold the S&P 500 whenever it comes down. A breach of 4155 and a movement below 4155 can only push it, okay, in this direction, okay. Anyways, the good thing is that whenever it comes down, okay, 4155 is expected to hold, and then okay, this again a reversal in the S&P 500, but this reversal will be back to 4195, and again the same means again the same story, okay, breach, close and sustain, and then only, okay, it can move up. But once again, it only has these the 2.5 days, that's it, okay, nothing else. Now if for any known or unknown reason, let's say, okay, with heavy manipulation, if the S&P 500 is able to move towards 4300, 4291, okay, within 2 days or within 2.5 days, this means that definitely, or not definitely, but most likely, okay, most likely, because definitely will be more speculative, okay, so most likely or highly likely, this means that once the FOMC minutes of the meetings, okay, if once that is published, then there will be a very, very heavy fall, okay, very heavy fall, okay, because we have seen that the market manipulators, they were in rush and they have pushed the S&P 500 higher, okay, and it was able to breach 4155 and 4195, okay, this was the manipulated movement. But now yesterday the Federal Reserve Chairman, okay, he brought in more confusion, okay, that is why, okay, again a manipulated movement towards 4291 and 4300 will simply means that now the S&P 500 is highly and heavily manipulated and is very heavily or highly likely it is susceptible for a fall, very good fall. And once again technically there is nothing beyond 4227. Okay, technically there is nothing beyond 4227. Anything that is beyond 4227, okay, that will be non-technical. Other than that, yes, a movement beyond 4227 is possible. Possible up to what? Possible up to 4300. 4300. But if you say that the S&P 500 is going to move towards 4500 or 5000 or 6000, then definitely that is not. Because remember what I mentioned, okay, in the beginning of this, the probable movement. The second point, what was that? The bank. That the banks are under stress, very heavy stress. Okay, and as soon as one good bank or one big bank goes down, then this, whatever this the upward movement you are seeing 4300, it will be back to like, or you know, in a few weeks it will be back to like 3500 or 3300, right? So that is why there is a heavy risk, okay, but a little reward under these circumstances, right? So once the Federal Open Market Committee, this the minutes of the meetings is published, then only we will come to know whether the S&P 500 now has any chances to move towards 4300 or not. Okay, and then whether the technicals will support that kind of movement or not, right? But as of now, up to now, whatever data we have, whatever movement we have, it is simply saying that the technicals are not supporting any movement beyond 4227. Okay, but in future this may change, provided that the data is supportive and everything is like fixed, economy is fixed, okay, and there are no chances for the recession, and then no bank is going to fall, and there will be, you know, no debt default, and everything is going smooth. Okay, now on Wednesday, once the FOMC minutes of the meetings is published, if it is positive, in that case definitely, okay, a bullish movement, that's not a problem. If it is neutral, in that case, okay, again more confusion, right? Then the market manipulators will decide whether to move up or whether to, okay, or whether to give, okay, a bearish movement, right? If there comes a bearish FOMC minutes of the meeting, then also for some time the market manipulators, they can try to keep the market or this the US stock market, okay, around these the levels, and then there will be a fall. So overall 4155 and 4195, these are the two very important numbers, these are the two very important levels, okay, or the zones, the resistance and the support zones. Okay, beyond this bullish, okay, beyond this bearish. Simple. Okay, let's keep it simple. Below 4155 bearish, above 4195 bullish. Above 4195 it is 4227. Below 4155, okay, it is free. It is free to come down to at least 4035 zone. So the picture will be very much clear by Wednesday, okay, in the second half, once the minutes of the meetings is published. And if you are my community member, okay, then I will analyze and I will tell you, okay, now what we are expecting, right? But once again, guys, there is no change in my comments that any bullish movement for any known or unknown reason is a blessing in disguise. If you are planning or trading in the long term, minimum 1 year, in that case you can collect the shorts and the put options, because that is going to give you a lot of money, right? So you need to collect these shorts and the puts, okay, at appropriate levels. So guys, hit like if you have liked this video, and if you have not yet subscribed to the channel, then please subscribe to the channel and hit the bell icon. And if you want these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, this was my S&P 500 technical analysis for the week of May 22nd, that is from May 22nd, which is Monday, until May 26th, that will be Friday.